Hello everybody, welcome to my first Technical Outlook video. My name is Tristan and it's currently 10 a.m. here in Sydney. The market has just opened for the first week of 2021. So with that, I hope you've all had a good start to the year and looking forward to a big year of trading. And in this series, I would like to give my analysis and share my thought process on how I dissect the markets from a top-down perspective and share my analysis and where I think a certain number of pairs are going in the next few days and weeks as we start a new month, a new quarter, and a new year. So thank you very much for joining. I hope you find some value from this video. And without further ado, let's get straight into the charts. So in front of me right now, we have the dollar index. The dollar index is the world reserve currency in the foreign exchange market, and it basically measures the strength of the dollar against all the other main currencies like the euro, the pound, the Aussie, and the yen. So it's very important to understand what the dollar index is doing, which will help determine what's happening on the Aussie dollar, the euro dollar, and the pound dollar. So on the right hand side, I have the 3-month time frame, which is the quarterly time frame. So this candle right here represents the last quarter of 2020 from October till the end of December, which just passed. So as you can see, the dollar index has been very weak over the last 3 quarters of 2020. Just absolutely died all the way from 99, 97, now it's at 90. So the last quarter actually closed at 90 precisely. Similar to where these previous candles closed in January 2018. So if we understand the big picture, understand where price is right now, then we can drop down into the lower time frames, such as the monthly, the weekly, and the daily, to understand what's actually going on here. So if I go to the monthly on the right hand side, and I'll just expand this, you can see on the monthly, price is actually stalling here. So we can actually potentially see another spike lower than 90, maybe to 89, even potentially to 88, where we could see a small short-term retracement, maybe for the first few months of 2021, up to 92 or 94, and then potentially roll over back down to 88. The other scenario is that we could just keep falling. As you can see, the dollar index is very, very bearish right now. So it could keep falling to 88, and then we'll have to assess what happens when it gets to 88, if it can keep going down to 86, 84, which is previous levels of resistance on a monthly time frame. So yeah, it's very important to understand where your levels are on the higher time frames, monthly, on the weekly as well. So the weekly, the last week, the dollar index, it did close below 90 on the weekly time frame, and it did show this bearish sort of doji candle with a spike to the downside, which could indicate price could actually follow through, fulfill this area, and keep going down. So we'll have to see how it reacts this week. In particular, the dollar index on the daily chart on the left hand side, we can see it's just slowly trickling down, and there's no real signs of a bullish move here. So the best thing to do is actually take a short on the US dollar once it makes a new lower high, because we are trending down, making lower highs and lower lows, lower high, lower low, lower high, lower low. I just put this trend line as well to illustrate a bit better. So what we can see, another tap of this trend line, another tap of the trend line, and then roll over to the downside. If we break above this trend line, well, we'll need to sustain above 90 on the daily chart, and preferably on the weekly, to see another push back up, short-term bullishness, maybe to 92 or 91. So let's see how that goes on the dollar index. So the next up, I want to have a look at gold. So let's have a look at gold. So we'll start on the monthly chart again at 3 months. Just type in 3M on the right, and let's expand that one out. So gold is very, very interesting, because last year we could see we had consecutive bullish months. See, this is start of Jan, bullish month, bullish quarter, April, July, October, very bullish. And I can see here it passed the all-time highs on the candle closure and also on the wick high back in the 2012 era. We have made a new high at 2075, and price is sort of slowing down now on the quarterly chart, on a quarterly time frame. So if we go down to the monthly chart now, on the monthly we've had this massive rally that started mid-August 2018, and now we can see we have pushed up above this monthly level of 1775, which was previous resistance here, pushed up and actually retested that perfectly with the candle closures above 1775. On a weekly time frame, we can see price is sort of rallying again after bouncing from 775, and it's going closer now to 1950, which is a daily key level that I've marked out. So the reason I've marked out 1950 on the daily, if you look on the left hand side, we can see price has struggled at the 1950 area. You can see here back in August last year, we were just consolidating, didn't really know which way we were going. However, the market was progressively making lower highs around 1950, and then absolutely dumped, snapped right down. And then what did we do after that? We came up and eventually retested 1950, and you see those perfect candle closures at 1950, unable to sustain above that level, and then died back down. So I think this level is sort of acting as a magnet for gold right now, and you can see price is already, as the market has already opened on the 4-hour chart, the chart has indicated on market open we've already rallied about 111 pips already to the upside at 1909. So what we can see on gold is, from a higher time frame, I would see gold at least come up to 1950, see how it respects this level. You can either reject and come back down to 1775, or we can actually make a new leg on gold. We actually push higher, and then we actually come back down, eventually find support above 1950 or around 1950, where we can actually go much higher, retest the all-time high at 2075, and proceed even higher. So that's one theory on gold. On a smaller time frame, we would like to see gold actually retest this sort of area at 1900. This is a very key area. We see prior resistance, now we're breaking above. So we want to see if we can sort of have a retest of this zone, or we're going to continue up all the way to 1950. So we'll be monitoring that this week on gold. And last but not least, I'm going to do an outlook on GA, the pound Aussie, which is one of my favorite currency pairs. Starting on a quarterly chart, the 3-month time frame. So we want to focus on this region here, the most recent price action. So I'll just expand this chart. Overall, you could see the last quarter of 2020 was quite bearish. We saw one spike try to breach above 1.81 and another spike, but failed to sustain the momentum above 1.81 in order to continue up to the next monthly target at 1.87. So we can see the pound has been weak of the last 3 quarters of 2020. Bearish, massive bearish smack back down below 1.81 and sustaining below. So if I drop down now to a monthly chart, we can see that December 2020 closed above 1.75, rejected this level. However, we are sort of trapped between 175 and 1.81 in this moment in time. So if we go down further now to the weekly chart, weekly we have slowed down even further. Now looking at this range here, the last week I was at 178, around 178.50. That was a high, and the low was at 176. We are within this very tight range here. As you can see on the daily chart, we are still consolidating between 179 and 176. So from a higher time frame, we are still above 175, so we can potentially see another push up, another retrace to form a lower high in this overall daily downtrend. As you can see, price has made lower highs, lower lows, and if I drop down to an 8-hour time frame, you can see there is a steady trend line. Just expand this out again. There is a steady trend line coming across there. So we can see price actually come up maybe to 179, spike a little higher, tap this trend line, and then we can see another rollover back down to 176 or 175. If we break 175 and then we close below on a weekly, we can see price form a new leg to the downside to the next weekly target at 167.50, which is actually quite a large price target of about 750 pips, which would probably be carried out over a month or 2 months, depending on the average daily range of GA in the first quarter. So that is one sort of idea on GA. We can see short-term retracement above. If we break above 177.50, which we are currently struggling at right now, as you can see, struggling to close above this level, we need to see a push higher first, and then we need to sustain above in order to continue up to either 179, previous resistance, support here, potentially go up to the trend line, and then come back down. If we breach above this trend line, we can go to 181 and potentially higher once a new higher low is formed and support is actually solidified above 1.79. So that is my outlook on GA, and yeah, it's going to be an interesting start of the year. It's going to be a good month ahead. I know there's many opportunities already in the market, so very excited to see what actually plays out. So thank you very much for watching my first technical outlook video. I hope you found it very insightful, and I hope you learned something. If you did find some value from this video, would appreciate if you give this video a thumbs up. Please leave a comment below if there's any suggestions or feedback or any additional pairs you'd like me to go over, and I'll happily do that in the weekly outlook next week. So thank you for your time, and I will see you in the next one.